Good morning. Today is Monday, January 30th, and we are into the tail end of the first month of 2023. We have two more trading days, including today. Tomorrow will be the last trading day for the month of January. Thereafter, we're going to move into a new month in February, and we do expect a little bit of firework to happen this week. And of course, the highlight for this week itself is going to be the key FOMC meeting, which is going to be technically Wednesday, but based on our timing and because of our 13 hours ahead of the current Eastern Standard Time in the States, we are looking at 3 a.m. on Thursday morning, and that will be the first FOMC meeting for 2023, and the market expect the Fed to actually hike rates by a quarter point, basically 25 basis points. So this is within market expectation. Unless this rate hike is different from a quarter point, then the market will have no reaction. What is going to move the market essentially is not the rate hike itself, it's what the Federal Chairman is going to say after the rate hike in his regular speech post the FOMC meeting. Market participants will basically be looking through within his speeches as to get a sense of what the Fed chairman thinks in terms of whether there's going to be a period of pause. If that's the case, then I think equity market is going to rally. But however, if it come out swinging like a hawk, then of course the market may actually tumble. Okay, so do watch out for that speech, not so much on the actual rate hike itself, because nobody expect any difference. Everybody almost collectively is acting looking forward to a 25 basis point rate hike. But the question here is, will there be a pause? And if it's going to be a pause, what are the Fed thinking? Okay, so if that's the case, then there is the catalyst for equity prices to continue to edge higher. We have seen equity prices continue to edge higher since the beginning of the month. As far as the Dow Jones is concerned, it has taken a pause. Unlike what we saw in before the end of 2022, the rebound from the October low in US equity was led by the Dow Jones, because a lot of hot money rushes into the United States, and we have seen evidence that he has been parking in blue chip stocks, which is the Dow Jones. But this at the turn of 2023, especially for this month, we are seeing there's a slight change in this sentiment here, because the rebound that we saw over the last couple of weeks since the beginning of 2023 has been led by Nasdaq rather than the Dow Jones. So that is a little bit of a difference. Previously was buy Dow Jones, sell Nasdaq, but it seems that this round itself, I think the reverse is possibly true, because the rebound is more evident in the Nasdaq 100. So looking at the chart here, we can see that the market for the Dow Jones has not even breached the high traded on January the 14th. So you can see the high 34,432 remains a high for this month itself. So yes, the market is getting very, very close, and there's always that risk that it will actually surpass this level and challenge the December high of 34,712. So it remains to be seen. But the market, if you are bullish on US equity, the money is not in the Dow Jones. It is definitely in either the S&P 500 or the Nasdaq or even the Russell 2000. We can see that S&P 500, it has already been trading at the highest levels for this month, at a high of 4,094.21, which is the highest for January, and it's already flirting with challenging the December high of 4,100.96, which is just a breath away. Okay, but if you look at this structure itself, it does look like a three-wave rally. There's potential for a much higher rally, because depending on where you take the height, if you take the height here and use it to extrapolate from this low of 3,761.41, then we are looking at potentially much higher levels. Okay, if this is the level that you're looking at, then we are possible looking at 4,003. 67.08 to even 4,531 thereabout. Okay, so if you are looking at this entire structure as the first leg of a three-wave rebound, then obviously this will be the new target that you can aim for. Okay, so this is quite a bit of potential. That means it implies that the market is going to rally beyond the August high of 4,325.28. Will that be the case? Remains to be seen. Okay, technically there is this possibility, but fundamentally speaking, because we see the total collapse in US consumers spending, that may be something that you want to watch. Okay, of course, the retail sales number is already showing us that the US consumers is actually very fatigued because of very high interest rates. So now they are prioritizing their expenditure. So that could actually impact the GDP, and that by extension should impact the ability for the Federal Reserve to continue the rate hikes. Okay, but again, we want to see the language used by the Fed chairman when it comes to immediately after the FOMC. We want to watch what he says. Okay, over the Nasdaq actually has a good performance. You can say this is led by the Nasdaq. Market is at 12,248. But by and large, you can see that in the early stage of this counter trend rally, the Nasdaq was lagging far behind the S&P 500 and the Dow Jones. So for this market right now, is taking the lead in charging higher. To overtake the December high is not that difficult, because for one, it was lagging last month, and now it's maybe playing catch up. I can see it's very evident that this entire month here, you can see the Nasdaq is really taking the lead in taking the market higher. And if this is the case, this is a three-wave rally, then the market have very little upside left, because maybe we are looking at 12,400 to 12,900 at most. Okay, and the market should actually be coming under severe strain, especially near the September high of 12,740. Okay, so do watch out for this extension of this potential three-wave rally here to be kept somewhere within this zone of prices. Okay. Over in Hong Kong, okay, we can see that the Hong Kong market is on fire this morning. Remember last week, you only have 3 trading days. Last Monday, last Tuesdays, the entire Chinese market, including Hong Kong, was closed for two days, and it only reopened on Wednesday. So it only had 3 working days. So when the market reopened, the market was playing catch up. It gaps up, okay, and then it continued to trade higher. This morning, we can see the high traded was 22,700, and then starting to come under profit taking. But this is already very remarkable, because this market now is really charging away. There's still scope for the market to continue to edge higher. When we look at the Shanghai Composite, this is even more impressive. Earlier on, I was doing the Chinese version of the same presentation, and we have effectively removed the negative bias for the for this market. Now you can see that the market now only have green color boxes. It means on a daily time frame, this market has turned bullish. Okay, and if you use the same logic of a 3-wave counter trend rally, now this is the main trend. Now it's no longer called a counter trend. Now in any kind of markets, every dominant trend begins life as a counter trend. In this case, this is especially true for the Shanghai Composite Index. Today, this morning, the market took out the invalidation point at 3,300 and I believe 8.35. I remember the price that I mentioned to you guys, 3,308.35. The market actually surged beyond the level to a high of 3,310 this morning, effectively cancelling out the bearish structure that we saw. And now the market is in a different phase. The market right now is looking to go higher. And if this is a 3-way structure, potentially the market can actually go all the way to 3,375 to 3,470. So this is where the market will start to look vulnerable. But for now, it does look like it has a lot of catch up to do. Okay. Over in the Nikkei 225, we see a little bit of attempt to rally, okay, but this rally is so far very feverish. It's just not as impactful as what we saw in Hong Kong or whether it's in Shanghai. And the market high actually was traded last Thursday at 27,502. Again, we can only see this as a rebound so far, because every low since August last year has been much lower. So unless we have a higher high than December high of 28,200, then we can say that, okay, maybe something else is happening. But if this market fails to even surpass the December high and started to pick and fall back, then of course we will have another series of lower lows. Okay, and that means the market is coming down. Okay, so do watch out for something very different happening in the Japanese market. Over in dollar yen, we can see that this is the 4 hours time frame. This morning we can see a pop up for above the falling channel here. I've been mentioning the fact that last week the market actually attempted to pop up but couldn't maintain, couldn't close above it. But so far, I think this morning there was another attempt. Hopefully by the end of trading in New York tonight, we can see the market clearly stays above the resistance line here, outside of the falling channel. Then we will have to remove this channel and maybe just keep a a support line here and see whether the market will retest it. But basically, I think that is actually working out pretty well for the bullish case. Market, if continue to edge higher, the first sign of any kind of sustained rebound is to take out 131.57. Okay, so from where we are right now this morning at 129.5, I think this market here may actually find a base. So if the market ever falls back to 129.5, that could be another chance for us to buy for a rebound in dollar yen. Okay, over in the euro, you can see the prices continue to edge higher, but still remains very much within the rising price channel here. But the good thing here is that the market has not been able to cross beyond the midpoint of this rising channel. That give it a little bit of a downward bias. And for confirmation, I need the price to close below this falling channel support line. And if we have a close below this channel here, that will be the first concrete evidence that the market may have a really peak at 109.20. 30 this last week. Okay, then for here onward, we'll be looking at dollar strength and currency weakness. Okay, over in the Aussie, this is quite different. Aussie market has been very, very firm. In fact, we can see this color is green in color, and it shows that the market on the daily time frame is basically biased to the upside, and it is supported by three factors. One, we have continued very high inflation, which we saw last week in the Australian market, our economy. So that means the Reserve Bank of Australia have no choice but to continue to hike rates to support this currency, okay, in a fight again to try to bring down inflation. On the other one is, of course, commodity prices. We see gold prices have been very, very firm, although we saw a bit of a weakness going into last Friday trading. But by and large, you can see the precious metal firmness may actually work in favor of the Aussie dollars because after all, the Australia is a commodity currency. Okay, then of course the last factor and perhaps the more important and durable one is the fact that China have reopened and do away with the zero COVID policy. And over the last few months, since the change of government from Scott Morrison to okay, who is this current name? I can't remember the new name. Okay, anyway, there seems to be a softening of Australian's government rhetoric, okay, and it seems to be normalizing trade relationship between the two countries. And if that's the case, then China will probably resume importing raw materials from Australia because it makes more sense. Cost effective in terms of logistics is also nearer to China. So currently, China is buying from all over the world, from as far as Brazil for their iron ore needs. So it doesn't make a lot of sense. And to buy from Australia does make a lot of commercial sense. So if this is the case, again, this will be another factor to support the Aussie dollars. So whether you look at it from the fundamental side or whether you look at it from the technical side, the market is actually pretty firm. Okay, the only one currency in the Asia Pacific that I am very keen to take a counter trend trade, which is to sell, is this Kiwi dollars. Okay, now remember next week at the turn of February, we will have a new prime minister in place to take over this Jacinta Ardern, and nobody is I think today there's no report as to who will be the new prime minister. I have not read any report to give us a hint who the next PM is going to be. So that caused a little bit of uncertainty in the market, and that will definitely be a negative for the currency itself. So I do see a little bit of weakness going into the new month itself based on the fact that we do not know who this new prime minister is and what his view or her view is on everything from economy to geopolitics. We do not know. Okay, so basically it is an unknown factor. Okay, and over in the sterling market, we do see that although the market remains relatively firm, okay, but the momentum seems to be waning a little bit. Okay, the high traded last Monday, this is last Monday, exactly 7 days ago, was 124.48. Okay, since then the market has been basically trying to find direction. You can see that it ducked in and out of this midpoint of this rising channel many times. First it dropped below, then it bounced back up and dropped back low again. So the market is trying to rationalize and try to find a direction. In the event they cannot find a logical reason to go up, maybe it will come under profit taking, and that will cause sterling to come back down. Okay, over in the dollar versus Canadian, where's my dollar Canadian? Oh, okay, dollar Canadian is over here, and if you look at dollar Canadian, you can see that prices have been falling up to this morning. Okay, the low traded was 133, barely break below 133, but there was no stop below that. The market rebounded, and if this very gradual rebound that we see so far is able to extend all the way to New York, and on the daily time frame, if it can give us a a conclusive reversal signal, there's a very good possibility this could be the low. Okay, like I've always mentioned, 133 even seems to be the one level to hold the dollar versus Canadian, and if it can actually hold, it actually bodes well for the case for a rebound. Okay. Over in crude oil, we saw crude oil prices continue to fall. Last weekend on Friday, we can see prices breaks below this near-term support line very convincingly. And this morning, market tried to rebound. It could not go beyond this support and resistance line. So there is expectation that this crude oil prices may continue to edge lower. The low so far that can hold this market is $78.45, and if this level fail to hold, there's a possibility we may see a slightly deeper pullback. Okay, but by and large, I'm still positive on crude oil prices. Let's allow the market to tell us what it wants to do. I think a lot will depend on natural gas. Natural gas has been falling like a rock, okay, even up to this morning when the market opens a gap down to the downside and establish a new low at $2.61. But we will have to see. As the market continues to edge lower, it's no longer the case to sell anymore. The incentive to sell at this current low price doesn't make sense. And in fact, the risk has actually increased exponentially. So what we are trying to do here is to see if there's going to be any sense of profit taking that comes in and then cause the market to have a reversal signal. And then I think we want to trade on the counter trend possibility here. Okay, wait for the market to tell us. Okay, so far there's no conclusive sign that it's about to bottom out yet. Okay. Earlier on, I did mention gold prices has been very, very firm. This high traded was 1,949.16 last Thursday. And you can see on Friday, there was a bit of pullback, but it's not very obvious. But I hope this pullback can actually result in something more substantial. One thing to do is to look at this near-term support line. If it's taken out, then I think the market have a good chance to drift all the way to between these prices, $1,866 to $1,872. I think this area will be a great area to look for reversal signal if the market can actually slide all the way there. Okay, I'll be watching keenly because I have always wanted to be, I wanted to go long on precious metals, regardless whether it's a silver or gold. But if it's silver, I think the prospect is even better because there has been report that there's massive buying of actual physical silver. The market is so short of both metals, and if there's going to be a pullback, I hope the market can actually challenge $22.76, which is traded last week, and hopefully even lower to $22.25 thereabout. Okay, I think this is a much decent level because we have another low here, which may actually provide some kind of support here, $22. Okay, so hopefully we can see this level and then allow us to position for the long run. Okay. Over in cryptocurrency this morning, we see a pop-up in Bitcoin to just under 24,000 and then starting to slide back. This market is super bullish right now because since the beginning of this month itself, the market has been going up non-stop and very little sign of any profit taking. That means interested parties are going to hang on to their trades, to their long positions for as long as possible. Now, the market has rebounded so aggressively on the idea that the Federal Reserve is going to slow down its rate hike and maybe even hold that rate constant for a while and perhaps even cutting rates. So the idea of access to easier credit is behind the run-up in crypto prices led by the Bitcoin. So this is the market analyst perspective to explain why we have seen such a firm rebound for the entire month of January. Okay, so do watch out for continued strength going forward. Ethereum did not have the same optimism as Bitcoin because it did not take out the January 21st high, okay, at $1,681. So right now the high traded this morning was $1,660.67, and we can see a market is pulling back a little bit. But by and large, we do see that this market is also very, very well supported. If this end up as a three wave, then maybe the market can go down and test the $1,500 level to make it a three-wave pullback. Okay. Over at Ripple, we do not see follow-through buying as well, although the market actually rebounded this morning to 0.42 cents. But again, it is still not able to challenge the 0.4330 cents, which was traded a week ago on Tuesday. So by and large, this market is also waiting for something to happen, but based on its own, I think it's just tagging along for the ride. Over in Cardano, we are seeing something very similar than what we saw in Bitcoin. Market have a new high traded just under 40 cents and then starting to to stabilize. But what is interesting here is that the market is sandwiched between this support line and this resistance line. Now, this resistance line is very meaningful because it go way back to March of last year. So this is a very long-term line, and the market has stayed above. Okay, clue that market is doing well will come in yesterday over the weekend. The market actually popped up and stayed above this line, and this morning there was continued buying, going all the way to 0.399 cents, and this is actually underpinning the market for further strength ahead. Okay, we look at Solana, we also see something very similar. Solana has actually popped up to $26.79 this morning, and although there's a pullback here, this market remains very well supported by this support line that originated in December last year. Okay, so we can see that I think 30th of December, this market has been respecting the support line here. So by and large, unless this line is taken up convincingly, this market is very well supported. Again, this is all I have for you for today. I hope to see you and give you another update tomorrow. But do remember, the key date to watch will be February the 1st. Technically to us is February the 2nd at 3 a.m. Singapore time, and then followed by Friday we have the non-farm payroll, which is going to cause a bit of firework this week. All right guys, this is all I have for you for now, and I'll see you tomorrow. Bye bye.